What up? What up? It's Friday, another week in the book. So let's check some charts. We're gonna run through the S&P, the Nasdaq, the dollar, oil, Bitcoin, Celsius, whatever that is. I mean, I know what it is. It's a drink. I don't know what this chart is all about. Apple, Nvidia, and some housing. But we'll start with the S&P 500. Again, we're still doing this little pullback here, but it's only little until it really goes. But some key levels, even if it comes all the way back to 4,000, it can still be in a bullish pattern. Um, not great if you're buying it at 4,600 if it goes all the way back to 4,000, but it's just sort of like you're still around a reasonable top. If you go back to the most recent support, which was basically in that banking crisis in March when some of those Silicon Valley banks were going under. The midway point between here and there is at about 4,200. So I think 4,200 is like definitely on the table. We could pull it up or actually pull another 50% down and see that it is quickly approaching this mark here, which is at about 4,400, 4,417. Look for a turnaround at any of these points. If it breaks below each one of those, uh, definitely consider that it could be going lower. And if you're a little bit over leveraged at that point, you may want to take some risk off. Nasdaq, tech has been driving a lot of this recent run. So we're probably due for a pullback, but it's a small pullback as of right now. We are down about 6%. I mean, that's not nothing, obviously, but fail safe at 13.2. I'd say that's a long way down. That would be a total from the high, another 17%. That would be 17% down, and it would be from here. It would be another 12%. I mean, that's a rough scenario, and we kind of really went through all that right here. So, you see this recovery. Obviously, it's a possibility that we are in a long-term bear market and we'll, just slowly consider uh, trickle down from here. But, I mean, right now we're clearly in this like ascending sort of channel. I don't expect it to hold up exactly like this. Like this has been a great year so far. So back testing some of these levels is not that crazy to me right now. So if we look at some of these spots in this 14.3 to up to 14.5, um, great place for support. So don't overlook that this pullback could just be to retest some support. The dollar uh, is cause for some concern. It's been down since September 2022, and if it were to pump past 107, we're a long way from there, but that would probably be really bad for risk assets. If you move down to some of the more recent resistance, because the dollar has been bearish, which is good for most investments. But it has overtaken this latest mark, which comes in at about 102, and it's at close to 103, if not exactly at 103, 102.9 right now. So it's broken back above that mark. This is the dollar. If it comes down and retests and then goes higher, that would basically be bullish for the dollar and not great for risk on assets, that is. We've got this little trend line working here. We'd like to see, it's very possible for the dollar to come up and test that and get rejected and stay bearish. So we're kind of in like no man's land where we're waiting to see which way it's going to go. It's not the end of the world if dollar has some strength, but it isn't great for risk on assets. Inflation is a concern, and oil is part of that. And you can see that like gas prices have been coming down, the price of oil has been coming down, but a lot like the dollar, it has broken some key levels. So I had that level at about $78, $79. We're broken above it. We're at 83. Again, here's the opportunity to figure out, Are we if we just continue higher? Obviously, it's on a run. I would expect that to, um, add to the problems of inflation. But I think there would be some significant resistance around 93, $94, and then we could head back down, or it could come back down to retest this 78, $79 mark. If it breaks through, you know, great. Go to the gas station and fill up your tank because oil prices, gas prices are coming down. But there's also the opportunity for it to bounce right there. Bitcoin, not much going on with Bitcoin. Kind of this quiet consolidation that people get a little bit nervous about. But again, this year I think it will, if it goes on another run, it's not getting past 42.5. Like 42.5, I think we'll see tremendous resistance there. And then if you go from basically back to October, November 2022, that's where we kind of bottomed out. We start to go on this run. Um, I just feel like there's going to be a lot of strength around the 24 to 23.6 range. And we are quickly approaching the first line of defense, which would be from this pump from June of this year up to like 32,000. And the midway point between that, between 24.6 and 32, is right here around 28.5, 28.3. So, right now, I mean, in terms of the last few weeks, Bitcoin is looking a little bit weaker. We got this slight downtrend over the course of 1, 2, 3, 4, 5 weeks. So, 5 weeks down, we actually pumped up a little bit here. I think that was like the PayPal launching a coin, pumped up, got rejected, back down to around 29, but still holding up in this strong zone, but it's approaching this downward trend line and the 50% margin. So, it's got to break one way or the other. And that could be a sign of weakness if it breaks down below, I'd say like 28,000 is probably where you don't want to see it break down too low. Celsius, a lot like Monster. Remember we talked about Monster? These are beverages, and they are just strong. I mean, look at this. Look at this channel that we're in right here, and really extends for a long time. I mean, this is since January 2021. Both Celsius and Monster. Do I have Monster up here? Monster beverages. Just something about drinks right now. Um, tough to see if you want to buy at the absolute top of this channel. But some more key levels if you bring this down to its most recent. Um, buck 26, that would probably take a little while to consolidate, but if you want to go another halfway in between there, a good target for it might be like 152. Just because look at this is the way it's been going, up and down, but just in this ascending channel, you could definitely see it reach new highs and get a decent buy somewhere down around here. That's just Celsius. I just saw it was a big winner on the week. Haven't really looked at it any further than that. Apple and Nvidia up next. These are cause for concern because, like I said before, with the Nasdaq, big tech has been driving a lot of this little run for this year, and Apple is slipping below what I like. I call this first line of defense, which is at around 180, and it's coming in at about 178 right now. So if it closes the week, if it closes the week, then again, this can possibly flip into resistance. If it comes up next week and gets rejected, then that's definitely a sign of downside to come. But if it pops right back above this, that in itself is a good sign. You slip below and then you bounce right back. So Apple, it could this, I think we're going to look back and say that this is probably an amazing pullback, but it might continue a little bit further. I think there's going to be great prices for Apple. Apple is obviously an amazing company and has held up the best out of almost all the blue chips. Nvidia just on like this freaking parabolic run, up 350%. That's like a meme coin, except it's just like a really high quality company. So fail safe around 293, first line of defense. at about 387. We're at 409 right now. So again, like this pullback up here, you were probably salivating for it when it was at 480. If you were like, oh man, if I could get it at 400, now it's at 400. Are you going to buy it? Like, we're going to pull the trigger on this because, I think that even if it doesn't continue on this meteoric rise, I think it's probably got another high in it in the not too distant future. So, you could easily see it come down and then give it one last run. And if from there it's over, not over, but if it slows down just because it's been on such a ridiculous run for a long time, um, this is where it gets tough because when you see that pullback, you go, "Oh, what if this was the top? What if this was the top and we're all headed down from here?" This is where it gets tough. But this is a key level. So if you start seeing a bounce around here, it could be a sign that the bulls are back in town and they scooped up Nvidia at lower prices and are now going to hold. Last time we looked at DHI. Now we're going to look at XHB, Home Builders ETF, and you can just see that it is holding up well. I mean, you could call this a little bit of a pullback, but uh, the home builders are very profitable right now, and it's reflecting in the stock price. So, you know, as if these things come down, because I'm probably not going to invest in the actual ETF, but you can keep your eye on it for the overall health of the housing market. So if this ETF comes down another 8%, if it breaks that $77 mark and that flips the resistance and all of a sudden it's getting held down from there, you could say that maybe housing is in trouble. Now, you have to have with housing, you have to have a long-term outlook. Like if we look at it on a monthly perspective, you can see that it bounced just like a lot of other things bounced in June of 2022 and is on the way back up. But this could be certainly could be a double top here, and that could mean that this is headed lower. But you can look at housing before you look at the stock market, and so if we start to break that $77 mark, it flips to resistance, we get rejected there, and then it goes down to break the $68 mark, then definitely a sign that housing is in trouble and that the stock market will probably be in trouble not too long after. At least that's what's happened previously. That's what happened in the last housing crisis, 2006, 2005, 2006. Housing started to falter. Construction started to falter. Housing market began to, hit a wall. 2007, 2008, stock market collapsed. So just using some big real estate stocks and indexes to keep an eye on that. Say, as long as construction is profitable, then that's one warning sign that we're not quite getting. It doesn't mean everything is healthy by far, but if there are some problems, it's going to certainly start to reflect in the profitability of construction. So that's it for this week, and I'll catch you guys on Monday.